Hello, everyone. Two quick notes before we start. First, as you might have noticed, this is our first video episode. So thank you for tuning in if you're watching us on one of the video channels. And second, today's episode is sponsored by Edel Finance. That means they've helped fund the production of this episode. It does not mean I've vetted their product as an investment or made an endorsement. And as with any episode on Paradigm Shock, nothing today should be construed as investment advice. All right, let's get right into it. Today's guest is building something that sounds simple, but is potentially radical. He's taking the credit infrastructure that banks and prime brokers have quietly profited from for decades and putting them on chain, on a blockchain, that is, or a crypto network, for anyone to access. So Andrés Soltermann is the co-founder of Edel Finance, a decentralized lending market built specifically for tokenized equities. Their mainnet just went live in March. They had 90,000 people on the wait list, and they're the first lending protocol ever deployed on Robinhood chain. So Andres, welcome to Paradigm Shock.
Thank you so much for having me. I'm super excited.
We're excited to have you here. So as we always do on Paradigm Shock, before we deep dive into what you're building, what you're working on, where did you come from before you started Edel? What's your broader background, be it traditional finance, crypto, other emerging tech? Would love to hear about that and how the audience would appreciate it.
Cool. Awesome. So my background is in software engineering. I'm a Swiss guy, if you cannot hear it already from my accent. Grew up in a little village. We had more cows than humans. Then eventually left to the big city, Zurich, 400,000 people, the biggest city in all of Switzerland. And I went into software engineering. And in 2020, I stumbled across DeFi, and this got me super excited. And ever since then, I've been building or helping out companies build stuff in decentralized finance. We started by doing yield aggregation. We did a stablecoin. We launched the first Swiss franc stablecoin back in 2022. And then the last thing we did before Edel was lending markets. So we built a lending market for very exotic assets that me, myself, wanted to use as collateral to borrow dollars against, to take on leverage, right? And we were never able to get this to fly. We were stuck at around $5-6 million of TVL, or considering, or could say, assets under management. And we were looking for a pivot. Where do we want to move into? Where we're anticipating where new funds or a new wave of excitement is going to come into decentralized finance. And around the time when we were doing our research, Robinhood announced they were going to do tokenized equities. And for me, this was this aha moment, the first domino stone. I thought it's going to be the first domino stone to fall, where equities are going to come on chain. We saw the first wave where the dollar came on chain through stablecoins, right? $300 billion right now on chain. Next wave was treasury bills. This was interest-bearing stablecoins, things like DAI, Ethena, or MakerDAO, Ethena, now Sky, and others. And to me, the obvious next thing to come on chain to be able to benefit from 24/7, 365 liquidity is going to be equities, right? We saw Robinhood, we saw Xstocks launching literally a day later, which recently got acquired by Kraken, Coinbase, and it's only a matter of time until players like Revolut, like eToro, and others are moving on chain. Even Nasdaq just partnered with Xstock. So a lot of movement happening there. And because we already had a lot of experience with lending infrastructure, we were like, okay, there is going to be a need for a lending product for tokenized equities on chain. Mm-hmm. For us, it was very obvious that someone will do it. So because we have the experience, we will do it, right? That was the thought process. I got together with my co-founder, James, who's from investment banking, and we started this company, and here we are.
Well, thank you for that introduction. So is there a specific moment you could walk me through, and you may have alluded to it right here, where you saw something that others weren't seeing? Because equities, tokenized equities, it may not be, or securities lending, I should say, more specifically, not just token equities, but the securities lending doesn't seem to be like, to many people, like the most obvious entry point into DeFi, decentralized finance. So what was that moment? What went through your mind that, aha, this is something that I want to be able to, I want to build, I want to be able to help others enable?
Yeah, that's a very cool question because I kind of went into it with Robinhood, right? I remember I was sitting in my apartment and I was like, I was thinking and thinking about where should I take this company, right? We were running out of funding and we were struggling, right? We go couldn't go places. We were stuck, right? I was I had to take this decision and say, okay, we need to move on. We need to reposition ourselves. And around that time, as I said, Robinhood made their announcement, and I remember me personally, I've been in crypto since 2016, and I remember starting. I went to presentations. It wasn't really conferences. It was like some room somewhere and some guy talking with a PowerPoint presentation, talking about how blockchain is going to change the world. And I remember people already back then saying everything is going to be on chain, real estate, and the stock market, and everything's going to be 24/7, 365. And now 10 years later, I mean, Bitcoin is like, it has, I would say, reached mass adoption. I would say that. I would say Ethereum, kind of, right? But besides that, like no financial infrastructure really moved on chain, even though
Mhm.
everyone kind of agrees that it is a better technology, right? That the tech stack that TradFi is built on eventually reaches its limits, and blockchain is the next step, right? But nothing happened. And seeing that a fintech company with huge distribution like Robinhood is saying, we want to build on this technology, not to pump a coin, but because it makes our product better, that really inspired me. And for me, it was like, okay, that's the moment, right? And because I already had a lot of experience with lending, and I've been a personal user of crypto lending infrastructure. I can quickly explain maybe how this works. You use any coin as collateral, for example, Ethereum, and you borrow dollars. Why would I do that? Because I have this cool yield strategy that's paying me 5, 6, 7%, and I don't want to sell my ETH or my Bitcoin, or my Solana, whatever, or I need to pay for something and I don't want to sell the asset, or I want to do leverage. I post collateral, I borrow dollars, and I reinvest it into the same asset, and I suddenly have a leveraged position, right? I've been using this product for the past 6 years, so I'm native. When I think about lending, that's how I think in terms of smart contract, over collateralized loans. That's my world. When I got into crypto, I was too young to be able to buy stocks. I'm a crypto. I started to learn about finances and investing through crypto. Still to this day, no, I bought MicroStrategy, but I'm not a stock investor. I do everything in crypto. So I had this deep knowledge from a user perspective, from a builder perspective on lending markets. I saw this event with Robinhood as something very significant, and that more is going to come later. So I put these things together. And then, why do we position ourselves for securities lending? I was doing research. I was thinking, okay, when a hedge fund wants to short a stock, and again, I'm not from TradFi at all. My co-founder James is. So I looked at this. I looked at securities lending. I learned about securities lending through doing research for this venture that I wanted to do. Right. I was thinking, okay, when a hedge fund wants to short a stock, they have to borrow it somewhere. So I was looking, where do they borrow it from? And that's how I got deeper and deeper and found out that securities lending is such a gigantic infrastructure and a huge industry, where a lot of middlemen positioned themselves. You have a custodian, a broker, a prime broker, a clearinghouse, and everyone is taking cut. And it was obvious to me that, okay, equities are generating yield, but no one, they don't end up at the actual owner of the equity. Normal people who invest, they end up in fees between middlemen, right? And in my world, in my lending world, it's peer to peer, or not literally peer to peer. It's peer to pool to peer, right? So I lend into a pool, and another person borrows out of the pool. The fees are transparent. The interest rate is transparent. Everything is 100% transparent. Everyone knows exactly what's going on. The fees, there is a 10% cut to the protocol, the person who built the smart contract, and that's it, right? So yeah, it's just such a it's very empowering to see, okay, stocks are an interest bearing asset, and a lot of the yield that is actually generated is being skimmed away, not because of the institutions are bad people, but because the infrastructure is just very expensive to run, and people need to have a salary, right? And people need to be paid. So yeah, that was like my thought process, my route to say, okay, I want to go all in, because I strongly believe that this is the future of how securities lending, how equities finance, how even Lombard loans and everything is going to be handled. And that's what we have built.
And thank you for that, Andres. And one of the reasons that this episode interested me and what you're building interested me is you said the word infrastructure. I counted at least maybe 3 times or more in that last answer. And this is very much using blockchain and the public networks as an infrastructure play. And that's a topic that we cover here quite a lot in Paradigm Shock, because changes to infrastructure tend to have the potential to be large paradigmatic shifts, potentially paradigmatic shocks. And so to the extent we've had fintech episodes in the past, and they've been focused at the infrastructure level, similar with AI, really focusing at that and broadly defined the infra level. This is, and that's what you're really building isn't about, from my understanding, about this coin or that coin. It's really about enabling the real world financial system, and in this particular case, equities, but at the infra level. And the second part, I think it's important for listeners to understand, even if they're not crypto natives or have invested a lot or spent a lot of time in DeFi protocols, is that in the traditional financial system, as you said, it is what you actually see and interact with when you go to, say, your Fidelity brokerage account, like I do. Not an endorsement of Fidelity, is just what I use, and you put in a trade, and everybody puts in a trade, or you go to your bank account. What you see is just the tip of the tip of the tip of the iceberg.
Yeah.
Underneath that, as with real icebergs, most of the volume is under the water. You don't see it. It's massive. And that's not a critique of it. It's not it's not a compliment of it. It's just reality. Like, the financial system literally involves thousands of people working in thousands of skyscrapers. Each skyscraper has thousands of people in hundreds of cities around the world, and many of them very nice cities. But the reality is, it's a massive operation. And what you see is seamless. Or like going into a Google search, like you type search at Google, you think there's nothing going on. Well, there's a enormous operation sitting underneath that is invisible to you.
Yep.
And the genius of it is that whether it's Google, whether you just press search, or whether you just press buy or sell at your, and on your brokerage account, it is so seamless for you. But underneath that, there's a lot going on, and it's invisible. And so, now bringing it back to what you're building, specifically tokenized stocks, and not just tokenized stocks, but stock lending, is something that is largely invisible to the retail investor. Almost
I didn't even know
entirely.
that it exists. I was not aware of this industry at all, right? So it was so interesting for me to come from this 100% DeFi crypto native view. In German, we say I had the DeFi goggles on, right? And I was learning about. I was like, okay, so how does it work? How does a hedge fund borrow a stock? Who do they borrow it from? Who facilitates the lend and the borrow, and why would they even do that, right? And then learning about, okay, there are 4 different people in the middle. Why, right? Because in my world, everything happens instant, and it's also funny. Learning about, I was on the website. I think it was actually a Fidelity website, and I saw them celebrating. We're soon moving to T+1, and I had to Google what is T+1, right? Because in my world, everything is T0, like T instant, T plus now, and Yeah, so I was coming from this world, seeing how inefficient this whole world is, and usually TradFi is very, very efficient. I mean, as you just said, you do a trade, or you open your bank account, or you send money, and to you it seems like magic. You're not even thinking about it, but in the background there is a huge operation. The problem is not that TradFi is inefficient; they are extremely efficient, but they're
Mhm.
not interoperable. Like they are all acting in silos, right? And suddenly when people want to speak to each other, they have like JP Morgan has a different system than Goldman, and then Fidelity has another system than State Street. The cool thing with what we have been building for the past 10 years on chain is that you have a single source of truth, and assets can flow freely within seconds through 10 different protocols. And that's where the efficiency comes, this single layer of truth, where we are building just a lending ledger on top of, right?
That's great. And so that's a good intro for what is actually happening when stocks or equities are being lent out from one another. And this is typically something that banks do and broker dealers do amongst themselves, right?
Yeah,
And as they need their liquidity needs, they collect fees depending on which side you're either paying or collecting fees, depending on which side of various trading relationships you're on. And what you're building at Edel is actually opening that up so that a stock owner can benefit from that as well, and because
correct.
you're actually getting a piece of the infra, so to speak.
Correct. Yeah, we built lending infrastructure um, that allows anyone in the world. Doesn't You don't have to be American or European or whatever. It doesn't matter. Anyone who holds stocks, or who who holds stocks, can lend them into the Edel protocol. They can use the stock as collateral to borrow dollars if they want, like USDC, in our case, or they can just lend the stock and earn some yield on it. And if someone else on the other side of the world wants to borrow it, they pay interest, and the interest minus a 10% fee, which goes to the protocol, to us. Um, the interest rate, the interest is reaching the actual owner of the asset, right? So you see, currently, you mentioned Fidelity. They have a securities lending program. You can
Mhm.
earn yield on your stock. Um, However, they retain they do a 50-50 split, right? A- After the fees, right? So there are a bunch of people that are taking fees, and then they do a 50-50 split. So
Yeah.
the yield is enormously different. Like on a Tesla stock or on a Google stock, you don't earn any yield, really. Like,
Mhm.
it's dust, it's nothing. Um, you earn yield, could be interesting yield. For example, when GameStop was going crazy as it did, the yield on GameStop was insane, right? Because everyone was paying a lot of money to borrow
Yeah.
GameStop because they wanted to short it, right?
Right.
Yeah, usually you earn nothing. On some stocks you earn something, but even that little something is maybe 10-20% of what the hedge fund is actually paying to borrow the stock.
So now walk me through some of the progress that you have made. And I believe one of the notable milestones you've hit is you now are a featured app on the Canton network. So could you explain to the average listener, why is that consequential to an everyday user or investor? The fact that you're on this network, which is I believe it's a robust network, Canton, for at the providing some level of institutional credibility. But can you I gave you part of the answer there, but could you walk through
Yeah,
give the listeners an idea of why this is consequential?
100%. So we launched the Edel product that I just explained to you before, that has lending pools. People can deploy stocks, tokenized equities, borrow dollars, or earn yield on them. We built this with with retail first in mind, right? Like any crypto product that exists out there is always has always been growing bottom up, right? Bitcoin has been something that came from normal people, from some computer science nerds, into retail, and now suddenly the biggest buyers are institutions because they cannot ignore it anymore. Um, the same way with Robinhood was also a bottom-up product or company. Coinbase, Binance, anything that is crypto related always grows from bottom up. Now, since I would say 2-3 years, institutions realized, hey, crypto is not only for drug dealers and money launderers, right? There is some actual cool use cases that we can utilize for ourselves. I mean, they realized this already since the very early days. But I would say since around 2022, 2023, maybe I would say 2023, 2024, there was like a paradigm shift happening. And around that time, a new chain or a new network was started called the Canton Network. And if you look at their partners, it's anyone you can imagine from traditional finance. Like any bank you just think of now, they probably partner with Canton, right? So the reason why they do that is, or why a lot of people like to work with Canton, number one, they have an awesome BD team apparently, right? And number two, they built their network with privacy in mind, right? Privacy is the number one. Was the number one critique point, right? Cool that Bitcoin is mega transparent, but we don't want that as a bank or a hedge fund. As a hedge fund, our edge comes, like our edge is our secret sauce. If anyone knows what we're trading, then where's the advantage, right? So institutions, they don't want a transparent ledger, right? They want some sort of privacy, and Canton delivered that. Now, why did we decide to work on Canton? Because for the first time in history, I believe that there is the possibility of a blockchain product not starting bottom up, but actually could be top down if the institutions and banks and whoever wants to or has to participate here, if they want it, right? It's not a matter of that. Is the technology ready? Is it affordable? It's do you want to do it, right? And a lot of people who are like high executives in these large companies, maybe they don't want to risk it to bring up this new tech. They just want to play it safe, right? Never change the running system. But for the first time, we see this interest of institutions in crypto or in blockchain. You see BlackRock, Larry Fink seems like the biggest bull right now. That is like always talking about tokenization and crypto, and their ETF is doing amazing. So securities lending is an institutional product. It's an institutional scheme, I would say, right? Most of the people, if you ask them on the street, they don't even know what this is, right? They don't even know that you can earn yield on stocks, right? They wouldn't even understand short and why does a hedge fund have to borrow. Most people just don't think that far, right? So it is an institutional use case. We have been speaking to a lot of players. We are seeing a lot of interest from existing leaders in securities lending to expand into blockchain technology, and the chain that they're looking to do this on is Canton, right? We position ourselves, build on Canton, and on Canton is very different. On Ethereum, anyone can build. Right? If you say, hey, I want to launch my NFT collection, I want to launch a coin or whatever, you don't have to ask anyone for permission. You just, either you teach it yourself how to do it, or you find a developer that deploys it and it's done, right? On Canton, it works a little bit different. You need to be approved by the foundation to be allowed to build on the network, right? We just recently got approved to deploy on the network, which puts us in the same position or in a category with very select few companies that are building on Canton, and we're super excited to soon unveil what we're going to build exactly. We are already building it, but unveiling the product that is going to be deployed on Canton. Because Canton is at this like kind of crossway of institutional finance. It's accepted by institutions, but at the same time they open it up. We call this like semi-open finance, right? When Ethereum is like Wild West. Anyone can do anything that they want. Canton is like more secluded and private and segregated. Every single company can have their own little network, right? That it doesn't commingle funds with each other. So yeah, super exciting times right now to be expanding Edel to also a network such as Canton.
Yeah. How does being on Canton differentiate you from other DeFi protocols that are out there?
I mean, if you on Canton right now, Canton is a very new network. It's a new tech stack, so most people are not familiar with it. Also very interesting. If you look at Ethereum in 2017, that's when it like I would say maybe 2019 DeFi kind of started, and I remember the time really well when everyone wanted to build something on Ethereum or Binance Smart Chain back then. And finding developers was so hard. Like to find a developer that could code in that language was so hard, and they were so expensive, the developers, because the supply and demand was so different. And now you see something very similar with Canton. Canton is a novel network, new programming language that no one really knows, right? No one has really worked with it for a long time. Very small circle of people. There is no DeFi ecosystem yet, right? So it's being like built up from the ground up, and it's much harder to build on that chain. First, you need approval, number one, right? So a lot of people just don't qualify, right? There is no anonymous dev that deploys something that suddenly gets $1 billion in TVL, and you have no idea who it is. That can't happen on Canton. So it's being built from the ground up, and you cannot fork. Like this was a big thing in crypto, or is still a big thing in crypto. You have Uniswap on Ethereum, and then boom, someone just takes the code, copy paste, bam, and deploys it on BNB. And now it's called Pancake Swap, right? And whatever swap. And that can't happen on Canton. So yeah, it's very different. It's a completely different infrastructure, but if my thesis is going to turn out to be true, that okay, we are at a moment in time where institutions actually accept this technology, they are interested in this technology, they want to build something, and that there are going to be top-down products where these bigger players are integrating blockchain to their backend, then it's going to happen on Canton. And then you want to be positioned in this world where these people are, right? And that's why we're just positioning ourselves there and building infrastructure, potentially in collaboration with these with some of these institutions.
So, building on that, how much are you a direct to consumer or direct to user investor, retail and direct to retail play versus an institutional play or some combination thereof that's still TBD and work in progress?
Yes. So one of our biggest or one of our advisors, Brad, he used to be the global head of securities lending at BlackRock. From the first day we started to speak, he was like, don't work with institutions, go for retail. This is such an like this. You can grow this company, and like I said it again, bottom up, right? Like you can serve the small investor and then become so big that the institutions can't ignore you, right? And that's exactly what we've done. Now with the Canton deployment, we are still focusing on retail, but we're making sure that the rails and the access points are institutional compliant, right? We know already, even if we get $10 billion of TVL on Ethereum, institutions likely won't touch it because there is no KYC. They have no idea who they're borrowing from. They have no idea, or it's just the language is so different, right? There is such a mismatch of the ethos between TradFi and DeFi, and Canton is kind of like this gateway where you can enforce KYC, you can enforce segregation, you can enforce certain deposit withdrawal rules, right? That you cannot do on Ethereum. So we're adding Canton to our tech stack to prepare for the moment when institutions feel really confident, say, okay, let's go. Right now, people are still like eyeing it, looking at it. We're still a DTC company right now, right? B2C infrastructure. It's for retail investors. There is no minimum invest. You can deploy $1 if you want. We don't mind because it's all running on automated smart contracts, right? There is no cost attached to someone depositing, withdrawing, borrowing, or lending something. And Canton is this layer to prepare for institutional funds to tap in, right?
So, given where you are, walk us through how the product works if you're not an experienced DeFi user or even an experienced Web3 or crypto user. What does that look
Yes,
like right now? And what's the vision of where it's going to
yes,
go?
yes. So currently, you need to be versed in crypto to be able to use our product. Just to say this right now, right? We deployed our product around 1 month ago, the first version of it, and are now expanding on top of it, like building use case and so on. I kind of explained how it works before with the lending pools, right? You have a pool, someone can deposit into it or lend into the pool, and then another person can borrow out of the pool. The person borrowing is paying interest, and the person who's lending receives the interest, all through a pool system. So there is dynamic interest rates. If there is more demand on a certain stock, the interest rate goes up automatically without human intervention. And if demand goes down, then the interest rate goes down again. It self-regulates itself. Now, that's the fundamental layer. We believe that this product right now is perfect, right? But you to use it, it's not. You need to have this experience. You need to have a wallet. You need to know how to pay gas fees. You need to know how to tokenize. You can't just, take your stock you have on Robinhood and just boom deposit. It doesn't work, right? You would have to sell your stock. You have to buy it in a tokenized form, which you can do on our platform, and then you can deposit it as collateral, borrow dollars, or lend it. The vision is to make it more compatible with traditional finance. And that's exactly, again, where Canton kind of comes in, right? Opening up the gateways for partnerships with other fintechs, right? Let's say a fintech that is in Southeast Asia, right? That is offering stocks. We can easily integrate. You see now a lot of fintechs right now that are opting to use tokenized stocks, like let's say a wallet that instead of integrating real US equities, which in some countries is very hard to get access to, they use tokenized versions. So they say, hey, we work with X stocks, and people can buy tokenized version of Tesla, right? And now with these companies emerging, we can tap into them and allow these people to take loans against their Tesla, right? There a very seamless integration can happen, right? And then step by step with us creating better APIs and SDKs for and just these TradFi DeFi integrations, we can allow again through something like Canton, we can allow banks, brokers, and other fintechs that are not crypto native to tap into the liquidity that we have on our lending market. So it's currently this bottom up approach, right? But we're already laying the foundation for more institutional integrations, and then eventually laying the foundation for banks, prime brokers to do their stock lending through infra like ours.
And how much longer do you see until you're quote unquote fully operational? So think of like a genuine, real V1, not a beta, not an MVP, but a true V1 that's broadly usable.
I mean, technically we are there. Like it is live. You can lend your tokenized stock and borrow dollars. You can earn yield in your tokenized stock. It's there, right? The question now is not. The question now is more about when is the when does the public, or at what point do a lot of people feel comfortable in holding a tokenized version of a stock versus holding a normal, I call them legacy stocks, right, on their bank account or brokerage account, It's that that's the main factor here, because on a technological level, we are there. Like if you hold Tesla, like and there is also there is this shift in generations. For me personally, I told you in the beginning, I'm fully crypto native. I don't want to open a bank account or a brokerage account, do a 45-minute KYC, and to be able to buy a stock, right? I want to connect my wallet where I have all my money and boom, buy a stock, and then I'm free. I can put it into vaults. I can swap it on a Sunday evening if I want to for something else. I can lend it, earn yield on it. I can borrow dollars against it. That's the beauty of when equities merge or have the same or are able to flow on decentralized finance rails, right? And it's a question, okay, when do more people um, when do more people want to do that, right? Now we're starting with this small subgroup of people which are like crypto nerds like myself, right? Like people who live on chain, who have a majority of their capital on chain, and there is more and more are coming, right? Like the old school investors are dying out, right? While there is a new generation of investors that are slowly becoming older, right? Like I started with buying Dogecoin and wanting to and chasing my 100x in altcoins, right? And now 10 years later, I don't want to gamble away all my money anymore. I want to invest in something that I know is going to be survive and not crash 80% tomorrow, right? So I'm looking into equities, but again, I don't want to I don't want to change my how I invest, what my infrastructure is to invest. I still want to hold my assets in my own wallet, and there's going to be more and more people like that, right? So it's like it's a matter of adoption, of distribution. Our job is it to make the products easier, to make them more exciting, right? Because the infrastructure is here to lend and borrow with equities. Now you need to create use cases, like direct use cases, like leverage, right? Okay, I want to do leverage. Boom, pull the lever, and then I say 2x leverage S&P 500, or I want to earn yield on my Tesla stock, so just deposit here. That's what we are currently working on mainly. And then again, the Canton integration is to prepare for an influx of institutional capital.
And how do you differentiate Edel from the more established players? Think Aave, Compound, and what's your defensive moat?
Yeah. Yeah, I mean, these companies have laid the groundwork, the foundation of what we call DeFi today, right? We are the first company that has purpose-built lending infrastructure for equities. And it's interesting because equities or tokenized equities are so different to just normal crypto. Crypto is primarily 24/7, 365. There is no market opens. There is no stock split. There is no dividends, right? So stock equities are so fundamentally different to normal vanilla crypto, right? That you cannot just run equities and crypto in the same, you can't really throw it in the same bucket, right? So things like oracles, like liquidations, like corporate actions, we had to build our product around these events, around these these events, and that's where our moat is. Like we are the first lending market specifically and only for tokenized equities, right? Exactly.
So going back to when you started, and I know you've had some pivots, so we'll say when you started the pivot into tokenized equities, looking back in retrospect, this is a question I like to ask entrepreneurs. Looking back in retrospect, what's one thing that you would have done differently? What stands out? Give me one or two things that stand out. And here we won't start, when we won't say the beginning, we'll say the pivot into tokenized equities. Because if I said go back to the beginning, the obvious answer is, well, I would have figured out tokenized equities sooner. That's just my guess. But
Yeah. That's a very interesting question, actually. Mm, what would I have done differently? I mean, the space it's in its mega infancy right now. Like tokenized equities, this category is not even 12 months old, right? People have been speaking about tokenizing equities for a long time, but if you look at it, the first time when tokenized equities really became a usable thing, and the phenomenon was in June 2025, last year, right? So it's not even 12 months. It's mega hard to say what I would have done differently, because I just don't have enough time to look at the whole picture, right? We are growing together with the space, right? We're delivering products. I I would have loved to give you a better answer, but I think it's too early to say still.
Yeah. Why do you think it took the space so long for tokenized equities to become a thing in DeFi, and especially the niche within tokenized equities that you're focused on, which is stock lending? Like, why did it take so long for someone to figure this out?
Yeah, so I can tell you exactly why it took so long, because the infrastructure was not there before. So you Xtox is the first one to really build a very solid product, a usable product that allows you to buy stocks on chain. The first ones to do it. Then 2-3 months later, Ondo launched global markets. They also made the product work. These two are still the only real players that you can take serious in this space that we call tokenized equities. And the main reason why this happened last year was because the infrastructure in the backend was able to handle all this. Like, if you think about how crypto works or how DeFi works, I mentioned Uniswap before. You have liquidity pools for each trading pair, right? You have a liquidity pool on Uniswap, ETH USDC or Bitcoin USDC, whatever. Imagine for these markets to be liquid, you need a bunch of liquidity. It's not that efficient, right? I mean, it's getting more efficient. If you look at Uniswap V1 versus we're currently at V4, we've come a long way, but still you need a lot of capital so that people can even trade, right? Now imagine you have thousands of equities, right? And filling up liquidity pools for each asset is not feasible, right? So Ondo and Xstox, how they manage to get around this problem is they don't do liquidity pools. They when you buy an Xstox or an Ondo, Ondo's tokenized equity, you're basically sending them USDC. They take the USDC and they buy the stock on the actual Nasdaq, right? And that's how they're backed 1-to-1, and that's how they were able to grow. So an X stock or an Ondo global asset behaves the same way like a stable coin, right? And this was only possible thanks to a company called Alpaca Markets,
Mhm.
who is a broker doing both stocks and crypto, and both Xstocks and Ondo are building on top of their technology. And that's why only really you were only, because again there were a lot of attempts to do tokenized equities before, but because of this infrastructure that is that exists since last year, now the product is ready, and now you can actually have a product that actually has a great user experience, right? Where you can swap in and out $1 million, $10 million if you want to, right? Which before was not possible.
Yeah. And so this is a classic case of you needed infra to build new infra, or at least
Yeah.
complementary support, maybe not call it infra, but support innovations before you can actually build new infra. And you see this in so many places, and topics we've covered in this podcast. With AI, you needed neural networks, and you also needed GPUs, parallel computing. Really, you needed both. And
Yep.
ironically, they were both pretty useless. I shouldn't say useless. That's a whole nother topic, but they weren't as useful until you brought them together, right?
Yes.
And this is
Exactly. Same thing here.
yeah, and there were certain barriers, and one of the barriers that sometimes crypto people, if I can be a slightly critical, don't always realize is, like, liquidity needs or liquidity pools really difficult, and that's something that you don't have as much of a problem with traditional finance and with
Yes.
traditional finance, because of all sorts of very complicated reasons. And you can frown, well, ultimately it goes back to central banking, but that's kind of the point, right? Is that you can enable you can enable more functioning economies without liquidity. But it's interesting to see the crypto ecosystem. find their own workarounds to this. So, which is fascinating, and now it
Yeah,
brings into the traditional system is like an infrastructure upgrade. And
definitely. It's funny that you say that now. Like tokenized equities only works because someone figured out a bridge between the TradFi and traditional finance world and this DeFi world, right? So tokenized equities is only able to exist because it can tap into liquidity of the traditional finance world, right? But then what happens on chain is a whole new story, right? You now a whole new ecosystem just emerged, like us, right, doing lending for equities. But then there is perpetual futures, for example, which is insane, right? If you saw um, during the war, or I mean, still kind of the situation with Iran, where Trump decides to attack another country over the weekend, and then what happens to oil prices, right? The market is closed. So hyperliquid was the most liquid market where the price discovery of oil was happening, right? The same and the same is happening now with equities. What happens if Elon Musk if he dies on a Sunday, right? And then Tesla stock just nukes, right? Goes down hard. Like the price discovery is happening already on-chain venues. Hyperliquid was processing 10% of the global silver volume when silver and gold were going nuts, right? So you already see this now happening where there is a fusion between TradFi and DeFi, and I'm mega excited for this. This is what gets me excited in the morning when I wake up, right? To see now this new ecosystem evolve. I don't know what it's called. I would want to move away from this term DeFi. Um, it's something new. Is it OpenFi? Is it NeoFi? I don't know, but like, because I also don't really like the term RWA. It's kind of weird, but there is this new. There are gonna be so many new companies that use DeFi technology, smart contract infrastructure, to build awesome new products for everyday investors and also for institutions that can save them huge cost. If you compare an average bank has 20, 30, 40,000 employees, and Hyperliquid is doing the same amount of revenue, and there are 11 people, right? It's crazy. Like the level of efficiency also for institutions is unprecedented, and the new opportunities for normal retail investors are amazing, right?
Yeah, I would call it something like, I don't know if this is the best name for it, but it's really using decentralized compute and decentralized ledger technologies in conventional finance. It's still, you're not creating new assets that, as far as I can see, it's this
No.
traditional assets that have been around for forever, but
Yeah.
it's a major computer upgrade,
Yeah.
in a almost maybe a paradigmatic change in compute in terms of how those systems are designed. And you know, but people don't may not realize is that so much of what is in traditional finance is built on top of lots and lots of applications and compute, massive amounts,
Yeah.
and a lot of them are built generations ago on old COBOL systems, and they're just too big,
Yeah.
hard to replace because there's a lot of risk in that, right? And this is a significant upgrade, and an upgrade might maybe understate it, but you want to call it an upgrade, you could call it paradigmatic shift. I mean, whatever language you want to use, but something that is genuinely different in terms of how compute and the ledgers themselves are, how they're organized and how they interact with each other. So
Yep. That's it.
yeah. Well, we have to wrap things up here. We're at time. So thank you so much for your time. So one question before you go. So what does a win look like for you, say in 24 months? And you can give me you can give us the kind of the moonshot scenario, the dream scenario, maybe something, the more realistic scenario, or if you don't have two scenarios like that in mind, there is just one scenario. Uh, what does that look like 24 months from
Sure.
today?
Sure. 24 months from now, I would say a win, moonshot win, is us being the number one, the most liquid market for securities lending on chain, right? Being able to gather interest from institutions, from like very advanced, let's say, like more curious institutions, right? Like the cool hedge fund, right? That is like trying to optimize here and sees, okay, there's arbitrage opportunities between the yield for stocks on chain and the yields in the real world. I want to tap into that, and Edel is big enough so that I am willing to take the risk to do these operations. That would be one thing. Number two, we are not going to limit us to lending exclusively. We are currently actively building more use cases around equities and what does it mean to have an equity on chain, right? I mentioned a few products like perpetual futures, vaults, prediction markets. Lending is one thing. So there is a whole array of products that can be built on top of tokenization, on top of having equities on chain. So we are going to expand our product offering, and a win would be to be able to process massive amounts of volume, right? Massive amounts of volume, and become big enough, because that's how this scary new technology, this risky new technology, is able to get approval by the big players, is only through size, right? So size is all we care about.
Well, size is what you're aiming for. So we wish you luck. And in 24 months, we'll be waiting to see how this all pans out. Best of luck to you, Andrés Soltermann.
Thank you so
Thank
much.
you. Thank you for coming on Paradigm Shock.
Was a
Best of luck.
pleasure. Awesome. Thank you.